Welcome back for your weekly market update video for the 5th of September 2022. This is going to mark the day as a pretty grim day because crypto is looking pretty damn weak and Bitcoin really looks like it wants to test 17K at least. Let's just have a look at Bitcoin. I'll look at Ethereum. I will show you altcoins to stay away from. Just to be clear, I think you should be staying away from all altcoins, but these ones in particular, and we'll have a look at stablecoin dominance and total market cap 1, 2, and 3. This video is not financial trading or investment advice in any way, shape, or form. This is purely for entertainment and for educational purposes only. Always remember that forecasting in any sector is incredibly difficult, but the financial sector is by far and away the most difficult to forecast. My analysis is based off Gann and Wyckoff methodologies. If you're a fan of altcoin reviews in an honest format, then you've come to the right place, and every week I cover the market update. Lastly, it's not about being right or wrong that matters. It's about what you do when you're right or wrong that matters most. All right, let's get to today's crypto. So let's start off with Bitcoin and actually have a look. Now, Bitcoin does dictate the market. We should all know this by now, and Bitcoin has been struggling ever since about mid-August. Usually it happens to Bitcoin, and then a couple weeks later it happens to Ethereum. We'll touch on Ethereum later. But let's just have a look at Bitcoin. So clean cut right through the 50%. Unfortunately, right here on the 26th of August. And then we start to see if we're going to get some support in or not. Now, when I did my last market update, I talked about how Bitcoin was still making higher highs. We had a major low, a major low, a major low, a major low, and this low is sort of playing out here. But overall, the lows were not having to get lower, those extreme lows, which technically meant that Bitcoin was getting some support. However, let's just pay attention to the volume that's actually happening in this little churning period here. And as usual, we'll go bar by bar and I will tell you what I'm seeing. So let's start off from the 28th of August. We get a low selling day and a weak close, which is, we get a low volume day. We have a high open and a low close. It's not the weakest close. There's much more weaker than this, but it closes 2.41% for the day. It's not too bad. Then we get a big breakout day of Bitcoin going up 3.73% on above average volume. That's a sign of strength. Then we get a reversal where basically all those gains from the next day are basically eliminated. We get high volume though, and we close relatively mid on the bar. It's another sign of strength actually, because this is a down day and we have a very high volume. So theoretically, Bitcoin should have actually dropped lower than what it closed here at around that 19 and a half K per Bitcoin. Then we get the 31st, and this is where now the weakness starts to come in. We tried really, really hard to get the price back up. You can see the price starts to go up. You can see the volume starts to get really, really high now, but this time we're only moving 1.2%. You can see we have a bit of a head here. This is a big sign of weakness, this bar here, when you basically close mid on the bar. It means that there was so much selling that Bitcoin could barely move. Then you get the next day where we get even more selling, right? You can see how the bars are very, very small. This is why when you look at the price of Bitcoin, and with all my respect to other YouTubers out there, it's my style, of course, but I just don't know how you can look at a price chart without volume, because the price will tell you all sorts of things. But if you pair it with volume, that gives you a clear indication, or a high probability, I should say, of understanding what happened to the price movement of the day. And if we have a look on the 1st September, we can see a bit of a tail end here. It's called stopping volume, where basically you have a bit of a selling day. So people tried to sell, but it got bought back up, closed really good. Then the next day we tried to go up in price again. You can see again, once again, above average volume, tries to go up and closes mid on the bar. It's very, very important on your down days to at least close mid on the bar. You do not want one of these massive drop-offs where it closes really low on the bar like we did here. So it's looking okay. Then we get basically a mid bar where basically the price just doesn't move. There's no volume. There's no energy in this market. It goes up again on no volume. And of course, we're getting down. And once we start breaking this breakout bar that happened here, we're probably going to start testing lower, which it looks like it wants to do. So basically, to sum it up, Bitcoin has enormous amount of volume here that you can see, but the price has barely moved, which means that the demand just can't overcome the supply. That's all it comes to. You can say, why? Is it because of September? Is it because of interest rates? Is it because we don't know why? The whales will always have money, but for whatever reason, some of them have come in to support the market. Most of them haven't. They're starting to sell their Bitcoin. And we don't know why, but all you can do is look at a chart and say it's looking pretty weak. So it looks like they want to test these levels. Now I've drawn my lines here. The white line is actually around that 18.5K. So I'll zoom this out a little bit more and you can see this was the low from the 13th of July. We will test this white horizontal area probably in the next coming days. Now, hopefully we have to wait and see, but hopefully this will just be the test and we can bounce off it, right? So we'll probably turn around here. We'll probably touch it, hopefully move back off and, not have to test area number 2. I think we probably will test area number 2, which would come to this low from the 30th of June, which would be at around that 18.5K. And this would be more of your orange area. We don't really want to test these areas, but like I said, there's still some support here. If we break that, then we're going to the red area, which is test number 3, which would be at around that 17.5K. And that's when things get really dicey, because then we have to wait for another base to form. The more bases the form, the longer the next bull run will take, but it just means more accumulation is happening as they're just as they're grinding this price away, ready for the next bull run. When's the next bull run? We don't know yet. But at the point I'm trying to say is that the whales are just buying up their Bitcoin, they're buying up their ETH, they're buying up their shares, and they're just drawing it out, testing supply, ready for the next bull run. Because then when the next bull run starts, the whales will have plenty of Bitcoin, plenty of Ethereum, plenty of alts. It's a very unfair game. It's just how it goes, unfortunately. So we'll have to see how it comes in the day. Again, I just don't see any strength coming into this market anytime soon unless we get a genuine breakout, which may happen in October, but definitely I don't see it for the coming days. Let's have a look at Ethereum. Ethereum, as I've been saying, is in a much more stronger position. You can just see how high it is, still above its 50%. And Ethereum has outperformed the majority of altcoins. This is why I love Ethereum, because Ethereum outperforms 95% of altcoins most of the time. If you can pick the 5% that it outperforms, of altcoins that outperform Ethereum, happy days to you. You're going to be a very rich bear or rich woman. But it's very tough to do, especially in a bear market. So Ethereum is a very good risk to reward ratio, especially in a bear market. That's why I love it. And you can see we're still holding above our 50%. The problem is, if we look at our volume, we can see volume is starting to die off. And this is exactly what happened to Cardano. Cardano had its big, mainnet launching, smart contracts, and the price was already locked in 2-3 weeks before that even launched. So you could be seeing this was the high of the Ethereum. So this could be the priced in ETH merger on the 14th of August. And then, of course, this had to come down. But like I said, you're starting to see really weak bars. There's your breakout bar on the 50, proving its strength. But again, you're just seeing enormous amount of volume here, and you can just see the price is barely moving. So it's taking a lot of demand just to move this ETH up just a little bit of percentage, which is really bad. It just means there's too much selling happening. Again, technically, it is still in a stronger position. You can see the trend is up, and you can see we're still holding on our 50%. But like all good things, these things can come crashing down pretty quickly, and we need Bitcoin to be leading the charge, not Ethereum, because like I said, normally there will be a delay. Once this ETH merger is done and all the FOMO and the marketing is done and the whales start dumping it, that's when you're going to really see where ETH lands. And similar to Bitcoin, you'll be landing somewhere in these swing tops. So there's area number 1, number 2, and number 3. We'll have to see where it goes. If we have a look at ETH versus BTC dominance, you can see ETH has really done a fantastic job of outperforming Bitcoin. But again, I don't see that happening for much longer. Let's have a look at Bitcoin dominance, because you can see Bitcoin dominance has absolutely fallen off a cliff. Now, again, if you're familiar with my channel, you know how much I talk about Bitcoin dominance, stable coins, and total market. You know how much I talk about the pairing between Bitcoin dominance and stablecoin dominance. So if Bitcoin dominance is down, that doesn't mean altcoins are up. Clearly, you should know that. But if Bitcoin dominance is down and stablecoin dominance is up, then you know money's leaving crypto. Well, not leaving crypto, because technically stablecoins are a crypto, but they're out of just the altcoins and Bitcoin. So you can see Bitcoin dominance going down to 39%. We haven't hit this level until about January this year, and I mean even beyond that, Bitcoin dominance has never really had to test these lows. So crypto is looking really weak. Again, I want to stress the importance of Bitcoin's looking weak, because Bitcoin dominance is down. Let's have a look at USDT dominance, and you can see USDT dominance definitely on a major trend up. Now, that doesn't mean crypto is always weak. It means more people are flowing into crypto. But because we know that Bitcoin dominance is down and stablecoin dominance is up and total market caps are down, we know that money's leaving crypto. So I've drawn a few 50%. You can see 50% coming in cleanly at around that 6.91%. And you can see very nice, good area. So again, I showed you Bitcoin, how it was breaking down. This is what a genuine breakout looks like. When you get these breakout bars and then you have a consolidation, this bar, the breakout bar, does not get tested. Okay, so you can see we didn't have to test this. Then you get another breakout bar, and then it consolidates even more, and it doesn't have to test this area. Those are the true genuine breakouts. The true genuine breakouts are the ones that never have to test the breakout bar. So they don't have to test these. They just run. So right now we're finding support on the 50%. So expect stablecoin dominance to continue to go up. Next resistance point is at 7.56%. And then 8.17%. Again, I do think we are going to hit these levels, because it looks like USDT dominance wants to go on a run. USDC, which is Coinbase's stable coin, you can see, again, very much more cleaner to see. There's your downtrend. This is your time to start getting into some altcoins for some trading. And then, of course, breakout bar doesn't get tested. Next one, breakout bar doesn't get tested. Support coming in at the 50% at around that 5.66%. So we'll have to see where it comes. Next area, around that 75 mark at that 6.46%. And I mean, these stable coins, they want to look like they want to roar, guys. Let's have a look at total market cap 1. you can see rejection multiple times at the 50. Just look at this area, just facing rejection. So again, just like stable coins, like just remove it, right? Flip it. There's your down bar, your breakout bar to the downside. And then it doesn't even get tested, right? It just gets rejected at these 50s. Hence, it's looking weak. And that's because of Bitcoin mainly. If you look at total market cap 2, that's how strong Ethereum is. We're above our 50%. There's our breakout bar. We consolidate above it. But again, ETH's the only one holding this market up. And this is where crypto gets a little bit easier to track, because if Bitcoin's down, the market doesn't really have much of a chance. It's only a matter of time. Total cap 3, which doesn't include Bitcoin or Ethereum, and you can see looks very similar to Bitcoin, to total market cap 1. There's your breakout bar to the downside. Rejection, 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 rejection. A lot of times rejection. So we're probably going to start heading our way down. Now, I did mention what are some altcoins to stay away from. So in general, I would be staying away from altcoins completely, but the top 3 I would be staying away from. Number 1 is Torn. Now, what makes a weak crypto a weak crypto? Well, you can see if I look at total market cap 1, 2, and 3, they basically were above their 50% or near their 50%. The last major crash that happened in crypto was around that mid-June period. A lot of cryptos haven't had to test it. Most cryptos are sort of around here. Okay. Now you can see if you break your support that came in on the mid-June, it's looking really weak. And you can see Torn just absolutely broke it and had no chance. Tested it, came back, so failed at it. So stay away from Tornado. Do not be thinking buy the dip, because I mean this thing just broke that support from mid-June. Next one up is Illuvium. So you can see, again, very, very similar. This is a gaming crypto, and it used to be like over $1,000, and it's come down to $74. That's just altcoins in general. Mid-June, there's your support, broke it, consolidation, probably going to start heading down lower. Of course, support can come in at any time, but for now, I don't see it happening. Then you have Helium, another one as well. There's your June support, or May support in this case, broke it, and we're headed our way down. And you can see massive volume coming into the market. So we'll see if support comes in or not, but respect how it is. Market's down, and these cryptos are looking the worst. So stay away from these cryptos if you're going long. That's going to do it for this market update video. I hope it helped. I do expect some painful times ahead, at least for the coming days ahead. We'll have to see how it goes as the weeks continue to progress. But I still think Bitcoin and ETH are great times to buy, even though they could potentially and most likely go lower. You just don't know. It's a good time to start laddering in a little bit. But as far as those altcoins go, they are always a tradable market, but especially in a bear market. Make your gains and get out of there. Hit it and quit it. So if you like this content, make sure to subscribe, hit the like button, leave a comment down below if you have any feedback. But until then, everyone, I will catch you on the next video.